Good morning folks, this is Naeem Aslam, Chief Market Analyst at AvaTrade. Welcome to our daily fundamental video analysis. Let's begin by looking at the economic numbers, because today it is all about PMI data. From France and Germany, we received the manufacturing and PMI services number. What these data or what these numbers confirmed for us today is that yes, there is some sort of a bottom is in place while investors continue to assess the merit of this bottom. But one particular element which stands taller than anything else is that these numbers are still very much abysmal. They are still very much deep into the contraction territory, despite the fact that yes, the number is much better in comparison to the last 2 weeks. So this element has failed to stimulate the European equity market. If we look at the CAC 40, the DAX, or the Stock 600 and Stock 50, all these indices are trading to the downside. However, there is more to this than just the economic numbers. The reason that I am saying this is that Donald Trump, the US president, has anchored tensions between China and US once again yesterday. He has pointed fingers directly to President Xi, the president of China, right? And what he is saying, he's blaming China for the outbreak of COVID-19, and he's saying that the entire colossal damage is because of China. And on top of that, we also had the US Senate, which has overwhelmingly passed this particular law, which is going to bar the Chinese companies to be listed on American exchanges. So what does that mean in terms of a geopolitical tension? What does that mean, the relationship the US had with China, which is the second biggest economy of the world, and what it really means for the stocks that are already listed on American exchanges? Of course, I am referring to Alibaba and Baidu right here. Now, in moving away from these geopolitical tensions and going back to the commodity space, what we're seeing is that yesterday we had another abysmal data with respect to crude oil, but this data was showed that yes, the inventory withdrawal was much bigger than the forecast, but it failed to produce the kind of results that many investors were anticipating. Meaning they were expecting, because the data showed still, overwhelmingly more drawdowns in terms of inventory data, so they were expecting this number to produce some stellar performance in terms of a price action for crude oil and Brent. But guess what? That didn't really happen. The price action, as you can see in the chart, yes, the momentum is still very much sustained to the upside, but as we discussed yesterday, we have reached that territory of consolidation where the prices are likely to move to the sideways. Now, in terms of a US equity market, yes, yesterday, we experienced enormous amount of upbound for the equity markets, for the Dow Jones Index. As you can see in the chart, that the momentum is still very much intact. But the important factor to pay attention is that yesterday's gain was in around 300 points. But the day before, we saw a sell-off, which was pretty much the same. So overall, on balance, we are on balance, right? So the 1 day's gain and the other day's losses, they are cancelling each other. And today, the US futures are still trading to the downside. The Dow futures are down by well over 100 points. So this brings me to my final point of discussion, which is gold. The precious metal is still remain at a favorable position amidst investors. Investors still believe that the Federal Reserve is likely to push those interest rates in negative territory, because remember, over in the UK, the governor of the Bank of England yesterday has already to some extent has accepted that the bank is assessing the merits of negative interest rate. And over the last few weeks, enough ink has already been spilled to assess these merits, the merits of these negative interest rate. So if the Bank of England, ECB and then BOJ are already, talking about, well, or in the EC, in the Eurozone, in the ECB, and for the Bank of Japan, the rates are already in negative territory. If Bank of England also pushes the interest rate in negative territory, it is highly likely that the Fed will also have no other option but to put the interest rate there to show that competitive edge. Why? Because Donald Trump, the US president, has already asked for this. He's already highlighted this particular avenue, this particular weakness, that the incompetitive weakness I'm really referring to, that the US is really facing. And he wants the Fed to push interest rate in negative territory. That's all for today. See you guys tomorrow.